It's a difficult day, another difficult day for Credit Suisse. What can you tell us about the outflows in the wake of SVB?
So SVB, as you know, is a very recent thing which happened over the weekend and yesterday. So far, it's pretty calm. We even saw material good inflows yesterday still. Also, I had a client meeting which was very positive on that one. So far it's calm, but I think it's early days to look at that.
Calm, are you suggesting that you could also actually get inflows?
So we got inflows yesterday, which is a positive sign, I would say. And for us, and that is maybe a little bit, if I may say so, Francine, in comparison to SVB, it's a very different situation. We are GSIP, as you know, we are following materially different and higher standards when it comes to capital funding, liquidity, and so on. And that's why we said, we gave, I think in this situation is important, we gave LCR, liquidity capital ratio of like 140-40 at the end of Q4, which is a strong ratio, which has improved as we went through this quarter to like 150 on average, and spot being even higher on that one. So
outflows have not reversed, but they've actually lowered. When are they reversing?
Look, they have significantly moderated, as I put it. We gave an update on February 9 in terms of where we are on deposits and net new assets and so on. We will give next update with the first quarter result. But it is also very clear, and we talked about that, what has happened in like fourth quarter, we are fully focused on it, turn it around, but that takes longer than like just 2 months.
But then you have this material weakness today. What happened there? There's concern that actually almost every day there's some kind of bad news, and you have your share price at a record low. Like, that can't be a comfortable position.
No, but we published our annual report today, as you have seen. The financial result, I think that's the key message. The financial result is unchanged for 2022 and previous years. We delayed the report, as you have seen, a couple of days to appropriately deal with questions the SEC had, and we did. And that is part of a longer ongoing dialogue. And we acknowledge that we have a material weakness in the financial reporting control, which we are addressing and remediating forcefully. So.
How are you addressing that? So is that an auditor problem? You had PwC on the case. Is it their fault?
No, it's absolutely not their fault. That is obviously, that goes hand in hand as you work together with your auditor. But it's a collective finding, and we are addressing it. We have a remediation plan, and we are addressing it.
So you have an anchor investor that put 1.5 million in the bank. Now their share value has gone down by 1/3. Will they have to inject more? What kind of conversations are you having with them?
No, look, nobody is pleased about the share price development, but we manage what we can manage. And this is the execution of our plan. That's the right strategy. It's the right plan. We are executing at pace and even ahead of the plan. And I think our shareholders see that as well. That's an unpleasant situation in share price, but I can't manage share price. I can manage the execution, and I do.
So you don't think you're getting pressure from shareholders? You're not getting pressure from certain big shareholders to do more and actually to have all options on the table?
No, as I said, they're obviously not pleased with the development. I'm not pleased with the development firsthand, obviously, but we are executing. And once we are executing step by step, we show the market, and this is exactly why we said it's a 3-year process. And we are executing. And that is, the market will acknowledge that, and the share price will follow.
Do you think all options should be on the table? What about breaking up the bank? If you look, and I understand your frustration with the share price and saying, look, you're just executing, but when you look at the share price, 97% below that 2007 high, like, how do you regain from that?
No, but that you can't compare, as you know. But, as I said, it's the right strategy. I'm fully convinced of the strategy. We are executing at pace. We have the right team. And, that's why we said in October, it needs radical change. The bank needs to be changed. And we said it's a 3-year transformation. And you can't come after two months and say, look, why is not everything done?
But radical change could be splitting up the bank. Is it something that you're evaluating?
No, look, the new Credit Suisse is focused on the core strengths of the bank. This is wealth management, the Swiss bank business, asset management, what we put the market, i.e. the trading and sales business. That makes entirely sense. Entirely different risk profile. Will be very profitable and will reward shareholders. And I think the shareholders understand that.
When will you be able to say, like, the worst is really behind us?
But we said it's 3 years transformation. We said we are going to make a loss, unfortunately, this year because, and this is something which you need to understand. A lot of the restructuring costs, baked into the transformation are coming in 2023 before we see a lot of benefits. out of that transformation. And that is something which happens. That's why we said it takes 3 years.
3 years is a long time, Ulrich. I mean, a lot of the shareholders will start asking questions. I mean, have you asked them for more money to make it faster?
No,
3 years, especially in this banking world, anything could happen.
No, but you know, as I said, our LCR ratio is strong and very strong, has getting stronger as we speak. Our capital ratio is very strong at 14.1%. As we gave it to Q4, so we have everything we need to go through the transformation miles.
Are you expecting, the first quarter to be good enough to keep shareholders off your back?
The first quarter is, as we said, and we put it very clearly, we will make a loss in the first quarter, but you will see progress in the first quarter numbers. No question.
In terms of what outflows in certain regions?
In terms of business momentum.
Where specifically?
Example,
business momentum?
In the market business, for example, which was, as we all discussed, for reasons, clearly understandable reasons, weak in the Q4, looks better. Wealth management, we are making progress. Certainly not there where we should be, but we are making progress.
Are you comfortable with the banking system as a whole? I mean, we've lived through a pretty incredible couple of days, and if you look at the markets, they're all over the place.
No, I think so. I mean, this is somewhat an isolated problem if you want to. And as I said, if you are GSIPIT or if you look at large banks, I think we will manage through it.
Talk to me a little bit about Credit Suisse First Boston. So first of all, what's the timeline for the IPO?
The timeline, Francine, is unchanged, as we discussed last time. So we have a very clear plan to put it into market, create a liquidity event, most likely an IPO. We are working against our internal plans forcefully, and I would expect such an event in like 2025, as I said earlier.
Okay, any news? I mean, today you had news about the 20% that would go to Credit Suisse First Boston partners. What happens to the rest?
The rest is owned by us and obviously also portioned by Michael, as we announced it in like February. And the rest is owned by us. So this is our part of the bank, remains our part of the bank. We are going into liquidity and again, most likely IPO. We will be probably majority shareholder, and then we make decision, how our holding develops over the next following years.
So you're still looking for an anchor investor?
Yeah,
for Credit Suisse First Boston? Are you closer to finding one?
I don't know. Yeah, we are close to, but I'm not sure if it's anchor investor. We have a lot of interest from third parties to be invested into that, which tells you something about the strategy, I would say. Yeah. And we are evaluating that.
Middle Eastern investors?
Different kind of investors, different parts of the world.
But large chunk investors?
Made that decision, and I will inform you first. As you.
Oh, okay. How far away are we from that?
We are pretty close, I would say.
A couple of weeks? Will it come before the first quarter?
I will tell the market if we are there.
What do you find most difficult about your job?
Is to make it understandable, I would say, that we are absolutely doing the right things, that we need some time to get through. And this is what all my colleagues and I try to do, to regain the trust of the bank over the next couple of months.
But is it more important to regain the trust of shareholders or clients?
It is. Look, clients is, I told you last time, clients is, I would say, one of the best experience, even in this very difficult months last year. I mean, they are so supportive of us. They are listening to us. They are doing active things to support. They like to bank with Credit Suisse. It's a fantastic experience. But, the convincing of this is the right thing to do, we are executing at pace, and the head of plan is with all different stakeholders, all different ones.
But why are they taking money out then? If your clients are happy?
Because, and that's what I also said, if you are in a situation like we were in October, where you had malicious information out in the market at the beginning of October, we were not able to speak, legally not able to speak. And that's why I said, like 2/3 of the outflows stemming from October alone, 85% from October and November. And the moment we could reach out, we started that huge program, talked to our clients, more than 10,000 clients in wealth management since then, more than 50,000 individual meetings in Switzerland, and that has created momentum.
Are you frustrated, though, that actually you haven't been able to get ahead of that quicker?
No, I think we are really doing the utmost possible, and I'm proud, not frustrated, I'm proud of what my colleagues, my people at the front units have done since months. I'm really proud of.
But the message today, I mean, if you look at your share price, you're proud, you think you're executing, you're on a 3-year plan. If you look at the share price at a record low, does your stomach sink a little bit when you look at the share price?
Nothing which I like, obviously. But look, I can control what I can control. I don't control the share price. I control the execution of the right strategy.
And you think the share price will catch up if you execute?